Hello and welcome back to Only Divergences. In this channel we take a strict technical analysis approach to looking at stocks. That means no narratives, no news. Here we think everything is already priced in except for fear and greed. Sorry for the clickbait thumbnail, but that's for those who haven't yet subscribed. Before we get started, a big thank you to all those of you who have subscribed and who do like my videos. I really appreciate that, so if you can do that, I'd really appreciate that. So, today we're taking a look at the VIX. The VIX is the volatility index and essentially trades inversely to the S&P 500. I don't want to get too much into what it is. You either know it or you don't. And it's a security that trades and it has charts, and therefore we can analyze those charts to determine the probability of some of the moves that have happened in the past repeating in the future, understanding that those moves are aggregate human behavior. That's all we're doing when we take a look at this, okay? As always, we start with a longer term chart to provide context. So now this is the weekly chart, going all the way back to, let's just stick within the past 3-4 years here. Now, before we conduct any analysis, I want you to observe something about the VIX, and that is that this security has a tendency to compress slowly, you see, come down slowly, and then release to the upside, and do so quickly. Of course, it also does come down quickly, but that's a different that's a different video we're going to be working on later. For now, we're focused on the periods of high volatility that's followed by pronounced periods of drop off in price action. So, high volatility, drop off, high volatility, peak volatility, drop off, and then again on the smaller time frames as well, and then big volatility, and well, looks like we're at a drop off right now. So I'm going to pull up the average true range. This is the ATR. And I find that the ATR works perfectly for this. Now, this is harder to see clearly on the weekly time frame, but as we get lower and lower in the time frames, you will see how the ATR is a great indicator for the security. So in this time frame, we can observe that the VIX has spikes. Let me just pull this down here a little bit. It has spikes, then it comes down before releasing again, and compressing and releasing and compressing and releasing. And you can see this happens in smaller time frames and in larger time frames. So we have a smaller compression and release here, smaller compression and compressed here, released, compressed here, released. But then we also had a huge compression over here that had a big release, right? So the bigger the compression, the bigger release. And we can see now where we are today that price is compressing hard after the large expansion in the COVID sell-off. And we have to ask, when will the next release be? We know there will be a release, but we don't know where it will be yet. I think the specific question that we want to ask ourselves is, given the fact that we've had some, kind of a compressing support, compressing resistance level here, we want to know when we're going to break materially above that. And that would mean, really, we're looking to see a move into the high 20s at the least, right? That would constitute a nice strong break above this line. And I think that would put an end to this rally, this S&P rally that has materialized and risen nearly uninterrupted with small exceptions since last year. So to answer that question, we need to zoom in to the daily time frame. By the way, it's 10:30, so the market's open right now. I'm just taking analysis while the market's open. So here we can see the ATR somewhat better. So first thing I want to do is actually go all the way back here and point something out. So I'm going to draw a horizontal line here. And it's a little tough to see here. So let me just make this a little thicker. But you'll notice that every time after 2018, the big volatility explosion here, every time we got down to this line here, we had a release higher, right? Down here, nice big release. Came down here, nice big release. Came down here, nice big release. Came down here, huge release. But since COVID, this level has not come down. We've not come down to this level at all. So right now we have higher lows on the long term. You can see here, we have a low here, higher low, and we've actually made a higher low on the long term. But short term, we have this general area here where we have this compression resistance line. You can see. Now we could pop above it soon, but generally you want to have something that suggests that there's a buildup of energy before a release. And we've kind of built up energy here too, on the near term. We could also just hold on this line, continue to push up against it maybe, but really just consolidate and continue to consolidate for a very long time actually. One thing we know is that we have been compressing here in the VIX for 18 months, and every day that passes gets us closer to a point where we will have to move higher in the VIX, because we know that at some point we will have a move higher. What I am saying is that the longer we have to wait for this move, the bigger the move will be. So this is clear on the VIX chart, at least in the last 4 years. If we go back longer, we can see that this general tendency is true. Long compressions lead to big releases. And we're compressing again. And so, if the VIX does get back down to this 15 level, it's entirely reasonable that we could eventually see it rise to 60. This would be the 300% rise that I'm talking about, and it still remains a real possibility. So while you should be prepared, you should not have a hairpin trigger. In the immediate future, I actually do favor the VIX coming back down, or at least getting some resistance at this trend line. Looking at the MACD, we have a minor bullish divergence here, not very clear here. This is, I guess, what allowed for this little move higher. The question is that sufficient to push it even higher? I don't think so. You can see the move is not impulsive. It's moving back and forth. It's choppy here. And it's been like that for almost a week now. If it does move higher, it's going to run into this downward trendline resistance area that we've been talking about. And we would likely have an overbought position and or form a negative divergence. One thing that I would note is that because the VIX is taking its sweet time to get to this resistance, if it does get to this resistance, I would also not necessarily expect a sort of fast move lower in the VIX, similar to what we had in previous moves, because we can see that when you have a fast move up, you then have a fast move down. Well, we're not having a fast move up right now. We're having a very slow move up. Therefore, I think the choppy trading of last week that we've seen in markets may not be over. I'll update this VIX chart in the next few days or weeks to see what opportunities can present itself at that time. Thanks for watching. Remember to like and subscribe. Take care.